This 1 minute scalping strategy has 3 rules, just 3. And despite it being so simple, it's given me some of my most consistent trading days, like this one, and even this one. So in this video, I'm going to walk you through exactly how it works, the setups I take, how I know when to get in and out of the markets, and the one thing that stops me from taking stupid trades. No fluff, no filler, no pie in the sky theory that I've never actually used, just a process that I use every single day, and honestly, will use for the rest of my life. By the end of this video, you're going to understand why this is the only scalping strategy that you will ever need. Let's get into it. So the first step of this strategy is marking our Asia high and Asia lows out. How I do that is I use an indicator called Market Sessions by Leviathan, which is this one here without the volume profile. Now we're going to want to mark the high and the low. So you can see this here, yellow or orange box here. We're going to mark the high and low. And the whole concept of this is whichever side we sweep first, we are then going to take the trade in the opposing direction from a lower time frame. So in this instance here, coming into London, you can see the Tokyo low gets swept. And what we're looking for then is a reversal to target then the Tokyo high, essentially. So we're essentially looking for the sweep of the Asia low, and then we're looking to target the Asia high. In this instance here, we sweep the low first. So from there, then I am straight into either the 5 minute or the 1 minute. In this instance this morning, the 5 minute played out to a T. And all we're looking for then is we're looking for essentially a market structure shift. A market structure shift or a change in the state of delivery, which gives us our order flow shift. In this instance here, it was a change in the state of delivery. So a change in the state of delivery, all that is in a bearish price leg, we are looking for the last bullish candle. When we break above that, we know that order flow is about to shift or potentially about to shift, giving you a high probable setup. So in this example here, we sweep the Asia low, which you can see here, that's the horizontal black ray going straight through the middle. We then drop down to the 5 minute, very, very clean model comes in. We've swept the low. We then get the change in the state of delivery, giving us our order flow shift, a break above that last bullish candle in the bearish price leg. But what we also do is open up a fair value gap. Now, a fair value gap is a 3 candle formation. And in this 3 candle formation, you are looking for only the body of the candle to be present, which needs to be rebalanced to essentially it's an inefficiency of the market. So in this example here, this 1 candle here, 2 candle, 3 candle, you can see where I've got my box marked out, my rectangular box across. There's a gap between those candles. We've got the wick of the candle on the first candle here. Then we've got the second candle with that impulsive move to the upside, which opens up that gap, which is an inefficiency. And then we've got the wick of the third candle. So this here now indicates that we need to rebalance to here because it's an inefficiency in price. So we mark that up. We've now got a sweep of Asia low. We then drop down to the 5 minute time frame. We've now got a change in the state of delivery or an order flow shift. That indicates the order flow shift. And now we've also got a fair value gap open up. As soon as I see this fair value gap open up, a candle closure above this change in the state of delivery, I am then going to place my order at the open or the top in simple terms of that fair value gap with my stop below the lows. Now in this instance here, it comes back to that fair value gap. Obviously my order is already placed. We tap into that. This is the protected low. Our stop stays below the low and our targets are going to be the Asia high, which is this horizontal ray here. You can see this played to absolute perfection. So the 3-step process is really, really simple. You're marking out your Asia high, your Asia low, and when you come into London, if we sweep the low first, we're then into the 5 minute time frame looking for this formation here. So a change in the state of delivery to upside, a fair value gap open up, and back into that, stop below the low, and then we target in the high. Whereas if we come into London session and we sweep the high, we're then looking for the opposite. Exactly the same principle. We're just looking for a change in the state of delivery to the downside with a bearish fair value gap open up. Look for a retracement to that and then back into that and then to trade to Asia low. Now this is a strategy I use on the daily, very, very strong confirmations with this and a very, very good win rate with it. If we seem to range through London session and don't sweep Asia high or Asia low, leave the trade and come back the next day. The probability on this setup is very, very high. So you get 2 to 3 setups a week trading this exact principle. Sweep of Asia low, back to Asia high. Sweep of Asia high, back to Asia low. And it's the same process day in, day out. It's just a cycle. Now, if you are enjoying this video, just thought I'd take this opportunity to say, although this is my scalping strategy, I still have another strategy which is the same concepts that trades during Frankfurt, London and New York session for when these setups aren't present. So what I'll do is I'll leave the link below for my free training and I will see you inside. So now you've seen the example going from the 1 hour to the 5 minute. I'm now going to give you the example going from the 1 hour to the 1 minute. It's exactly the same process. Don't forget that. The market's a fractal. It's just whatever you prefer to trade, whether that be the 5 minute or the 1 minute or whichever presents itself first. So in this example here now on the screen, you can see I've marked my high and low out of Asia session. So we've got the high and low. What do we do first? We sweep the Asia low. So this horizontal ray here is the Asia low. We sweep the Asia low and then going to go into the 1 minute time frame to see if we can get exactly the same process that we did from the 5 minute. And the process hasn't changed. Market's a fractal, right? So remember what I said with the 5 minute change in the state of delivery? Exactly the same here. So what we're waiting for is a break above the last bullish candle in that bearish price leg that took the Asia low, which we get. So we then get a break above the last bullish candle giving us our order flow shift. On top of that, the same as the 5-minute entry model, we are then looking for a fair value gap to open up, which is an inefficiency that the markets like to rebalance to before then going in the opposing direction. So in this example here, I would now get my limit ready. I would place a long position at the open of that fair value gap. In simple terms, the top of the fair value gap, and then my stop loss below. Exactly the same process again. Where are we going? We want to target the Asia high, which is this high here. Every time we do this, we go from Asia low to Asia high, or Asia high to Asia low. Whichever one gets swept first, we're then targeting the opposing, obviously, liquidity pool or the opposing session high. I am going to play this out. You can see how precise these entries are when we come back into that fair value gap on that inefficiency. Sometimes we just tap and go, sometimes we'll tap, mess around and then go, but as long as your stop is below this protected low here, you will be just fine. So in this example here, we come just back into that, we mess around for a bit, and we do push to the upside, but we do come back. Now when it comes back, don't panic about that. That is just price rebalancing, wanting to rebalance slightly before then pushing to the upside. In this example, it does exactly that, but again, our stop is at the protected low for a very, very good reason. We're rebalancing, we now come into the New York session. Again, this is a slightly longer trade, but don't worry, Asia highs will always get taken if Asia low gets taken first, and vice versa. If it takes the high first, Asia low will always get taken. So here now we have hit take profit. Classic example of 1 hour sweep of Asia low into the 1 minute, changing the state of delivery, fair value gap opens up back into the tap of that fair value gap, and we're looking for our entries with our stop below the protected low, which is just below Asia low. This is a prime example of the 1 minute model. I've given you the example of the 1 hour to the 5 minute, the 1 hour to the 1 minute. Nothing changes at all when we're looking for these models. We are just looking for them on a different time frame. A lot of people seem to get confused when they're using a 5 minute or a 1 minute. It's exactly the same process. Nothing changes. It's just the candlesticks are slightly faster moving, which is obvious. The actual process and what you're looking for stays exactly the same. Markets are fractal, so whatever happens on higher time frame also happens on the lower time frame, and this goes with any strategy that you would trade in. So I hope that has helped with the scalping strategy, and I would like to hear your comments below. So there it is, my 1 minute and my 5 minute scalping strategy that you can now steal to make profits in the markets. Click here if you want to learn more about trading so you can be totally equipped within the markets, not second guessing yourself.